We're going into a holiday season. We're going into a few weeks of big discretionary spending. There's been talk of a Santa Claus rally. Do you think that will happen over the next 6 weeks, or do we have to wait until next year to potentially get out of this?
You know, I think the biggest thing in the room is that the U.S. economy is probably headed for a fairly significant slowdown, not necessarily a recession, but I think growth is headed towards 2% or less, and that's more than Wall Street expected for the slowdown. I think that's why this isn't just a tech event, it's an entire market event, and it goes beyond the stock market too. There's falling commodity prices, there's blowing out in bond spreads, so I think there's recession fear. But certainly what's added fuel to this fire is that the leadership, the place where everyone has money, the FANG stocks has started to really unravel, and that's probably generated more fear than having the rest of the stock market fall. I don't think we're going to have a Christmas rally. I think ultimately we might have a capitulation panic here, maybe before the year is over, where this thing goes below the overall stock market goes below the lows we hit earlier this year, and probably goes much lower and creates panic about imminent recession and the end of the bull market. I think that could be a good buying opportunity again, but we'll have to wait and see.
Bob, is the fear warranted or overblown?
Well, short term, I think it is warranted because I think we've been living in an era where there have been unrealistic valuations for a lot of these big tech companies. And I think it's finally coming to roost. I think we have to pull back and look at this more macro level, because I think fundamentally, you know, we've had these companies build up valuations that most people said this is just not realistic. So in a way, it's not surprising. We're getting there. We're finally seeing a mature tech industry that's being perceived not as a teenager, but as somebody in their 30s and more mature in terms of their perspective on the world. And so I think all of these things influence this. And fundamentally, these are still strong companies long term, but in the near term, I think these valuations needed to be corrected, and the industry, or Wall Street, is taking advantage of this turn down to readjust these valuations.
So, Jim, question there. Is this about valuation, or is this about the sustainability of these business models? I mean, if people aren't buying as many iPhones, or people aren't buying into Facebook, isn't that a problem?
I think it's more about the latter. I think it's more about not so much adjusting valuations as it is adjusting growth rates for the industry as a whole, as well as for these popular companies. I'm not a tech expert, but it just seems to me that the pace of innovation in technology has really slowed from what it was that really drove this. The last big thing, at least from the outsider view, is the iPhone, and the iPad was big, but eventually that just becomes a bigger iPhone, and the iWatch really has not been earth-shattering, and things like Twitter and Facebook are hugely popular, but they basically have been the same now for a period of time. And I think that the constant pace of innovation to more dramatic products that drove demand, have-to products, I think is slowed, and it really brings into question not so much valuation, but what growth rate are you going to put on a company like Apple? Is it hitting the IBM, Microsoft mature cycle where you have to downgrade that? There's also challenges to the entire internet. Who gets to decide what constitutes hate speech, or what constitutes fake news or manipulation, or is it all just free speech? Are we going to have the internet be open, or is it going to be regulated, and who gets to be the moral authority to do that? The decisions on that are greatly going to affect the business models of a number of these companies, no doubt. Not to mention, how much can you use user information in reselling, for example. There's challenges to Amazon monopoly status, much like there was to Microsoft in the past. So I think there's just a number of challenges to an industry that was way overowned from an investment perspective. And when you put those two together, it's a challenge for that sector as well as the overall market.
Bob, how big a threat do you think regulation is, or is it more about, trust in these companies? If people start to fundamentally question, do I want to share my data with Facebook? Can I trust them? Well,
I do think regulation is an issue for Facebook. I'm not as concerned that regulation is an issue for any of the FANG stocks.
Despite the monopoly problem?
Yeah, I mean, I think there are issues, and I understand that there are concerns around specific areas and the rate of innovation. Fundamentally, if you look at what's going on in tech, there are actually a lot of very interesting developments, but they're taking longer to play themselves out. And the growth expectations have been what's been called back. And these valuations were based on growth expectations that could not continue forever. And so I think what we are seeing is, yes, those growth expectations are coming down, and there's a recognition that they can't possibly have continued. But there are things coming that I think there are going to be some interesting things in 2019. Foldable phones, for one. I know a lot of people have their doubts.
You're bullish on foldable phones. I'm not so sure. I'm not so sure.
Well, here's the thing. I mean, all kidding aside, the truth is the general market has been concerned with smartphones being the last big innovation. So I'm saying, look, is there a different way to think about these devices? And I actually think it's an interesting category. It brings a wow factor back in that we haven't had in a while, and it gives people a new way to consume even services, things like Netflix, on different types of devices.